All right, welcome back. We're going to do another trade plan, part of our exercise, doing 30 trades, planning every aspect of the trade ahead of time, and then executing according to plan. We're going to work in Sting today. And, I've been doing little market structure lessons. I'm going to focus in talking about the price action that happens in the pivot area of a swing. And so we'll talk a little bit about that. But keep in mind, the important part of this is the trade planning, right? This is where you set the foundations for your mental framework as a trader. If you do not set these foundations, you will end up all over the place and you can't utilize any of this stuff that you learned from anywhere. And you can't set these mental foundations by reading it in a book. You have to do some kind of a discipline. So we're doing a particular exercise. If you can't manage to do a few trades following the plan, you're going to have a hard time seeing very clearly. And it takes work, right? This ain't easy. We're not wired for it. Trading is very difficult. So just keep in mind that that's our priority. But let's just talk a little bit about some market structure. So for instance, I have very objective methods that are going to tell me exactly where to get in, where to get out, where to put a stop. These methods are built from observations of various market structure. This is just a small piece of it. So let's talk about this small piece. I'm just trying to emphasize not to get hung up on this. So if you observe markets, right, you drop all the technical analysis and just make some observations of a pivot. And you can see a swing happening and just make some observations of a pivot. You'll start to see certain behaviors that happen in quite a lot of these pivots that you can then soak in. And all you have to do is go look, right? Find a swing and observe, right? With an open mind, be curious, observe, learn through observation. So these are a few of the things I've learned about pivots. And keep in mind, right, I'm also structuring markets through observation too. This is from a prior lesson, right? A new high confirms a swing low. And then I just measure the reaction swing. And I can say, oh, okay, these two are related. I measure the reactions. These two are related. These two are related. So I'm seeing a market that has minors, major, minors, major, minors, major. And you can do this through observation too. Just grab any swing and go backwards with it. And you might be surprised how often you'll find swings that are pretty much the same size. It's no mystery. It's just once a market gets going, people are buying it. Bigger money's buying it at certain percentages down, and it's leaving tracks. Right? This is not predicting. It's just observing what they are doing. Okay, so let's talk about the pivot component. First thing I'll talk about is an engulfing bar. So this is something I'll be looking for at the bottom of a pivot quite often in some of my methods. And what you'll see is, you'll see the bars basically shrinking at the bottom of a reaction leg. And then, boom, expansion. So contraction, expansion, and it will swallow at least 3 bars and close above them. Right? It's going to engulf them. It could expand this way, but it expands this way. So what we're actually doing is letting the market dictate our actions rather than us guessing because we have some secret number. The market is telling us when to move, when to pay attention. And so that's what it looks like here. So if I'm, say, analyzing this market at some point, I'm seeing these two swings. I'm seeing this swing. I'm literally seeing this shelf. And I'm thinking, oh, maybe a pivot comes in over here. And boom, when I see something like that, it's a good indication that the pivot has happened. The way I usually, if I'm playing that, the way I usually play it is to put orders halfway down, or to get in the crux here and to buy this. So I wouldn't have got hit over here. So that's what an engulfing bar looks like, but it's an engulfing bar at the bottom of a reaction leg. It's very much like a 3 drives type of pattern, but don't get hung up on the whole counting drives thing. You'll see a reaction leg, and sometimes if it swings, it'll look something like this. It might be 4 drives, who knows? It doesn't really matter, but it's very similar to a 3 drives, for those of you that know that. So a swing might look something like this, and then boom, engulf the whole structure. If you went down to maybe a 15-minute time frame, you would see this happening right there. So that's the first thing catches my eye in a big way for pivot, especially day trading, right? You'll see this as it pulls back. What do I see? Yes, I think I can switch these, or maybe I'll just do it here, and then I'll come back. So let's look at the S&P real quick, just to show you a different market, right? So just notice, you'll see swing, boom, boom, and look, it's not that long ago. There's something pretty much just like what I showed you in Sting. You'll see, right, contraction, and then one bar swallows it, closes above. And this would be my typical way of playing it. Now, if you're noticing, there's also an engulfing bar here. And while these are the same thing, they're in a different place, which give it different meaning. Context, right, determines what the content is. So for instance, this is at the top of an impulse. So I would never try to sell this anywhere. This is at the bottom of a reaction leg, boom. And so you can get curious about any pivot and just notice a few things. So we know this is the pivot, this is the bottom portion, right? And so you'll see the action is different than it was here. See, this is just, look at this, bang. Look at these 2 bars leaving a gap. And then look at these bars here from here, boom, 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 boom. And it'll leave like a U shape in here when there's a pivot happening. All right, so let's put this back to our stock. And look at the next thing. So the other thing I tend to look for in pivots is a gap swap. Don't force these on the market, but it's what we've learned about gaps. Wide range bar, bigger than the last 3 bar, and a space between the previous and subsequent. And then it makes this effort down, but then climbs back up and reverses that effort. That is something, I call it a gap swap. And you'll see it. It's at the bottom of this particular swing here. And it'll make this U shape in here. See it drop, chases everybody out, tail, 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 and then zoom back through. So those are the 2 things. What are 2 of the things I look at that I've noticed in pivot components? They're not in every pivot, because there's a certain relativeness. But you can make observations and learn from your observations, right, without just following the rules. It's just supply and demand. We're just trying to see who's in control when. Okay. So now let's get to the good stuff, the important stuff, the boring stuff. Trading is difficult. I mean, if you don't develop some training for this kind of thing, for the mental framework, you can't even see the setup to begin with. So my particular set, by the way, there's no pivot component in here. If there was to be a pivot component, it might end up looking like this. Right, engulf somewhere down in here. I just wanted to use this chart because it just had this obvious engulfing bar and this obvious gap swap here. And such beautiful, beautiful rhythm to the swings. All right, so now we're going to do a trade plan. And it helps to make a template. So that way you don't have to think about it. Just make your own template with your basic rules. This one is going to be the one that takes me in at the 50 line. And then I know exactly how I'm going to enter. I'm going to enter at 68.54, so it's pretty close. And the trades are placed a day ahead of time. I know exactly where I'm going to put a stop. So I'm just cutting up this reaction leg in quarters, 25%. And I'm using it for objectivity. You know, you can see this is basically a big shelf mountain that it's leaning on while it's in an uptrend. Then you have this big down bar followed by a reversal of that. But actually, none of that actually factors into my trade. It's just me noticing things. So 66.36. And then I need to calculate shares. And this is part of my trade planning routine. So let me find our sheet. And so I'll enter this into my own sheet, which is part of my documentation. And so you'll see that we've got a few trades that are already in the works. So today is the 6th. The stock is SDNG. We're going long. We're going long at 66. I don't know. Well, we're going long at 68.54. And placing a stop at 66.36. Are there better ways to enter, better places to put a stop? Probably. But that's not what's concerning us. This is about making some rules and sticking to your rules. All right, so that tells me how many shares, what my 6-to-1 target is. I already know my management ahead of time. So I just finished filling the rest of this out. I know my position sizing. That's all worked out ahead of time, right? I'm not doing any of this on the fly. So it's going to be 229 shares. And I'm not particularly concerned whether this wins or loses or stops. Yeah, I prefer to win, but the size is baked in, so it's no big deal if I lose. And the target's going to be 81.62. And I'll double check all this as I'm done. And so there's our plan. And from here, it's just a matter of placing the order. I'll just use the little risk reward tool here to create an order. Whoops. Still getting the hang of all this, right? Create a limit order. I don't want you. Oh, I guess I have to hook to my paper trading. There we go. All right, so you see we have 2 positions already on. Now I can do it. Okay, now this is going to be an order to take us into the market. So it's going to be a buy stop order at 68.54. We're risking 0.5%, which is 500. Our stop is going to be 66.36. And so always a stop goes in with the order, always. So our target's going to be 81.62. And we'll just double check. And yeah, we come up with a 229 rounded. And our stop is set. It's a stop order. Now, if price gaps above this is part of my rules, then I leave my order in here. I'll turn it into a limit order. But I'm getting long at this number, not above it. If it takes off without me, it takes off without me. And that kind of thing doesn't bother me, right? It's trained, right? That bothering part was been trained out of me. So I want this. If price turns around before hitting me and hits the bottom part first, I'll cancel the trade. But we're pretty close, and so we'll see. So I know what gets me in, where I'm going to put a stop, where I'm going to exit. I know what cancels the trade, and I know how I'm going to manage. So, it's calming to have all these rules set in place, so I don't really worry about anything. It's just set it and forget it now. And all orders are executed during regular trading hours, nothing after hours. So that's it. We talked a little bit about the pivot component and, making observations. So one thing I like to see is an engulfing bar. It tells me the pivot's being made. And the other thing is a gap swap. And there's other configurations, but these two are significant. You'll see them in other places. All right, so that's a wrap.